My guest today is Mattison Asher, who writes the popular crypto newsletter Rapture, which is distributed to some of the leading degens, investors, and builders in the space. Mattison has worked professionally in crypto since 2016 and has great insights into both the technology underpinnings as well as the bigger trends in the space. And as this is about blockchain, please note this podcast is not financial advice and is for educational purposes only. First, a quick shout out to our sponsors for this episode. Eastrock Software is a technology team that can partner with you to dream, build, and scale your tech stack, from helping discuss architecture through to adding developers or building out your team. Reach out at eastrocksoftware.com. Welcome, Mattison. How are you?
I'm doing all right. Thank you so much for having me.
My pleasure. So maybe you could first off tell us, how you got into blockchain.
Yep. So I first originally really started looking into blockchain networks in 2015. I had a friend who told me about Ethereum, and maybe it was because I played a lot of video games and I'd organize with people online. Maybe because I knew I wasn't going to fit well in a corporate structure, but I pretty much instantly recognized the value of having a network that could incentivize people to collectively contribute to a common economic goal outside of a traditional corporate structure globally. That idea made immediate sense to me. So after my friend who was actually building on Ethereum, one of the early projects building on Ethereum, told me about it, I started doing my own research into the Ethereum network and various other blockchain networks as well. In the summer of 2016, I was a rising senior in college, and at that time, I thought the path that I was going to take was to become an investment banker on Wall Street. So I was interning at an investment bank on Wall Street during that time, and all the summer analysts are tasked with choosing a technology trend that they think is relevant for the future. And while my colleagues from more prestigious schools than I went to chose what I would say the hot topics of the day were for that summer, I decided to do my research project on blockchain technology and the emerging digital asset ecosystem. Unfortunately, there wasn't a lot of interest at that investment bank in crypto and blockchain networks during the summer of 2016. And I actually didn't receive the return offer to join that firm after I graduated. So I effectively didn't have a job after college at that point. I was still a senior, and I said, you know what? I have a lot of conviction that crypto is still the future. And I actually took the money I made over that summer in 2016 and plugged it into Ether in Q4 of 2016. Obviously, 2017 sort of blew even my expectations away. But from that point on, I've been effectively solely focused on the crypto ecosystem. And so that's kind of my entrance story of how I got into crypto.
Yeah, it seems like it's interesting hearing the different stories about different people that participate, and often changed by when they started off hearing about that. And there's often like a fortuitous incident where somebody just told you or got you involved in it. And I mean, having seen it from 2016, there's obviously a lot of cycles that you've seen in the whole crypto space. So I think it'd be interesting to talk more about that. I think one thing, in the current bear market, there's a question around what is the value? I mean, you can look at the value through just looking at coin market cap and saying what the value is there and seeing the wild gyrations. But really, when I think about value, part of what I'm thinking about is what is the real value that these blockchains can provide? I think in a recent survey, more than half the respondents said they could survive 3 days without food, but couldn't bear the possibility of going 4 hours without the internet, right? So what does mainstream look like for blockchain? Can we paint a vision for why it's important to still care about blockchain and how what are the different ways it could impact on society to the level that people wouldn't want to let it go in the same way they wouldn't want to let the internet go?
Absolutely. So I'm going to start by saying what's the real value it adds today, and then I'm going to get into what's the real value it will add in the future. So today, there's a couple key points that I think people still discount in terms of how powerful they actually are, but makes a huge, huge difference and is already an improvement on the alternatives that are non-crypto native today. So the ability to send money to anyone, anywhere around the world in cents or for a fraction of a cost, within the cents range or a dollar range, and have that money be received by someone as long internet connection, that's truly powerful. And that's what these blockchain networks really allow. I don't need a bank account. I don't need my bank here in the US to communicate with some bank in South Africa, if I was in South Africa, to exchange that money. There are no delay periods. All I need to send money to either myself when I'm in another country, or to someone else that I'm working with in another country, is the internet connection. And that basically instantaneous transaction of value, that is a very, very powerful effect of what these blockchain networks enable. And it allows for a wide variety of applications and use cases to be built along that premise. So already today, that's a major, major, major value compared to the current kind of financial payment rails that exist when making transfers to people around the world. Another major benefit to these crypto networks is actually, you can actually program in scarcity. And while people, I would say, 10 years ago or 5 years ago weren't necessarily thinking about this issue quite as much, with the hyperinflation that's occurring in countries like Turkey and Lebanon and Argentina's having incredibly high inflation, and nearly every major country is having high inflation, that issue of having sort of a alternative asset that has programmed in scarcity is very, very powerful, right? And so just having that as an option, and that option being far more portable, transferable, easier to sort of utilize compared to other stores of value, that's an incredibly large benefit to cryptocurrency compared to the existing alternative technologies and assets today. So we went over the transferability, went over effectively the alternative currency or store of value narrative or use case. Sure, I believe that actually crypto will be the underpinning of nearly all global economic activity. So, whatever you're going and using some sort of application, whether in the real world or in the digital world, that company that you're dealing with in the real world, or that transaction that's happening in the digital world, will be related in some form or fashion to a blockchain network or happening within a digital currency sort of framework. We're going to get there, in my opinion, probably within, I would actually say 10 to 15 years. And I think that's pretty conservative because of all the benefits that these networks offer. And I'm just going to get into some of the benefits and the early stages of what that's starting to look like today. So like the DeFi ecosystem, for example, offers a significant advantage compared to the existing banking and financial systems around the world. So, here in the United States, I would say most people are banked. In a lot of countries around the world, the majority of the populations are actually not banked, and they cannot get bank accounts. Maybe they don't meet the minimum requirements of the amount of money they need to open up a bank account, or they can't actually pass that bank's application process. And so therefore, they don't really have many options of where to hold their assets. They can maybe stuff that cash under a mattress or try to find some sort of alternative solution. They have zero access to financial services where they can actually earn interest on that capital that they have set aside or they have earned through the work that they're performing. Go ahead.
And also, one point I think in the value proposition of blockchain, which I think is very interesting, is the ability to extend access to the dollar around or other currencies. So if you're in a location where there's high inflation, if you basically and you're maybe a knowledge worker who works like in programming, say for a US company, if you transfer your assets to a peso, there's costs of transaction, but there's also the rate that you get in the peso is manipulated by the government, but then also the value of that asset evaporates or through inflation, near 79% at the moment. So being able to get access to a tokenized dollar, which doesn't have those properties, there's still a question of how you spend that locally, which I think is sort of an interesting evolution. But in some interesting ways, it extends. One way people talk about it, I think, is extending the reach of the dollar potentially for subsequent, generations or two. So for that unbanked person, not only do they get a bank in their phone, but they also potentially get access to a dollar that they wouldn't have otherwise been able to get for work they might do over the internet.
Yeah, so I completely agree that stable coins does strengthen the use case of the dollar, and it makes it more easily accessible for people in these foreign countries to access the dollar and to also earn interest on a dollarized asset in that stable coin. So I do think actually before, while I do think the global economic activity will exist on these blockchain networks, that could be very well in the form of a lot of those transactions are being done in stable coins, but just happening to be verified and validated on the Ethereum network, for example. And so absolutely, I couldn't, it's very clear from the issuance of stable coins and how those numbers have really gone parabolic over the past few years, that people are utilizing these stable coins and they're gaining adoption, especially in these kind of foreign countries, emerging market countries.
Yeah. So I interrupted you then on the track of talking about how then DeFi. So sort of setting up the story, you then have individuals who have access to some asset, be it, a non-native fiat or fiat in the tokenized form. How can they then use that, right? Tell me a little bit about how the DeFi could support that.
Yeah. So what's really special there is you don't need this bank account. You don't need this third party to approve you in order to access financial services. All you need is that stable coin, the digitized US dollar or another crypto asset, and you can immediately access these open protocols like Compound or Aave and many, many others and start earning interest on those assets. And that's incredibly powerful because now I, as someone who lives in the Philippines, for example, can immediately open up this alternative bank account like function to allow myself to earn interest instead of having to go through this application process with the bank, etc. Same with borrowing money. As long as you meet these pre-programmed algorithmic rules for all these lending protocols, you can borrow money from them. It's not like there's a banker sitting across from you that's judging you based on factors like how you look or where you went to school or whatever other subjective factors that bankers utilize to evaluate your creditworthiness, etc. There's really just pre-programmed rules to access these lending markets. It's not like there's anyone subjectively evaluating you. And that's incredibly special because now people who previously have not been able to get loans can easily figure out ways to borrow money through these lending markets. Another really special aspect of these DeFi markets is instead of the lending market or the borrowing market being restricted to a specific geographic location, they're effectively global markets from day one. And now you're matching borrowers and lenders regardless of the geographic location, which really does increase the market size and the sort of accessibility of that market itself. It's way more efficient that way. It makes way more sense that if someone in Vietnam needs to borrow money and the best lender for that person to borrow money from happens to be in Mexico, to immediately have this sort of market that links those two people in a very natural way, then only allowing them to access the borrowing market in Vietnam, for example, by those local banks. So that's another really special functionality that DeFi introduces. We're on the early stages of adoption. I believe that system overall is way, way more efficient. It makes a lot more sense compared to the existing banking infrastructure. It'll take some time for that adoption to really catch on, though.
Yeah, and I mean, there's a lot to unpack there. And you know, one criticism people could levy against certain areas could be with respect to the interest you could earn on some of those assets. What protocol? Talk a little bit about. I mean, we've seen certain protocols collapse, right? So that was like a fake kind of value that was being dished out there. And on the other side, there's gaining interest for stablecoins. How can somebody think to navigate what is risky and not risky, or fraudulent on one end?
Yeah, so it's all incredibly risky right now, because we're not, you know, let's assume everyone's doing things for the right reasons and it's not fraudulent. This is still very early stage tech. There's a lot of areas where that tech can be negatively and adversely affected, like exploits, smart contract exploits. The developers who were really built to the tech could stop maintaining it. You know, there's a lot of risk vectors, and we're still very much in these early stages. There are not a lot of standards, quote unquote, that have been set for this technology. We're still figuring out how to develop on it, how to utilize it. And so there's risk, a ton of risk there overall. And that's not even including how prevalent fraud is within the crypto ecosystem. Because these markets are global, because they're super, super easy to access, there's a lot of people who view that as an opportunity to effectively spin up something with either fake, fake lending applications, or not actually capitalizing or doing what they said they were doing, and just either taking users' money or lying about what's really going on. There's a lot of that activity within the crypto ecosystem, and because the laws and regulations are complicated in a lot of areas and aren't as clearly conveyed, and there's only, you know, regulatory agencies today are just now, in my opinion, really actively stepping into the ecosystem in a major way. They've been acting in the ecosystem for quite a while. They're really starting to ramp up. Is that sort of activity really being questioned or really put down? And so it's this technology, because it's so easy to use, so easy to be built on, so easy to access. It allows people to access these applications that previously wouldn't have been able to. But obviously that opens the door for also nefarious actors to come in and exploit that openness to take advantage of people who don't know really how this technology works or doesn't know it as much. It'll be interesting to see how that changes over time, because in my opinion, it's way, there are not enough disclosures. There aren't enough, there's not enough hand-holding, to be quite frank, by these applications right now. And users deserve, in my opinion, better ideas of what exactly they're using and the risks and what those risks are. And so there's a lot of opportunity for this industry to change and improve how they communicate with users on those risks. And I think that's starting to occur as well.
So you could almost draw a parallel between what's happening in blockchain and maybe the early adoption of financial markets around the world, in that there was obviously risks and frauds and whatnot. And then basically US regulators and other global regulators came in and applied structure to help control it. Now, not all structure is good, but it definitely has unleashed economic capability in various economies. So I guess what you're saying here is, in blockchain, there's a lot of value, future value, that we sort of talked about, but then there's these layers of risks that will take time to evolve solutions for those. And those come in different levels, from purely programmatic bug fixes to systems to make sure that the crypto economics aren't fraudulent, right? Down to like those which are regulatory in nature. So maybe it's good to talk a little bit about regulation. Regulation is coming in. What are the good things? What are the bad things? And what should we be looking out for in that space?
The ideal situation, in my opinion, and this is a dreamer's ideal, right, would be to have the legislative bodies in the various countries that are looking to regulate crypto create very clear laws describing what crypto, for example, what assets are securities, describing the registrations that the people who deal or issue these crypto assets will have to go through, what the exchanges that facilitate transactions between users who want to buy and sell that, what registrations they will have to go through. The ideal situation for me is legislators to create clear buckets for all these different types of entities and have processes in place that will require them to either disclose certain information or register or have certain warnings for their users. The clearer that sort of that legislation could be, the better our industry can immediately start adopting those standards. In my opinion, that would lead to a dramatic reduction in the sort of fraudulent activity that occurs within the ecosystem today. What I think is the wrong way to approach, or the less ideal way to approach the industry, is actually regulation via the, let's call it, judicial enforcement. So regulation through court cases, through civil and criminal court cases, because the legislative branch hasn't come in yet and really outlined what the rules and different standards are within the crypto ecosystem today. Now, the intent of creating a framework where there's more transparency, where there's less fraud, where there's more disclosures, I completely agree with, and it's very necessary for this industry in order for it to mature and to really onboard the millions and millions of people that are out there who could benefit from this technology. They need to have that sort of clarity, the same way that when I'm eating a piece of food, when I buy it from a restaurant, I can have some sort of a surety that it's not been poisoned because of the regulations that are involved with that making of that food and the ingredients that go into that food by the FDA and others, right? And so there is definitely a need for that sort of framework to be implemented. In my opinion, I think the optimal path for that is actually through laws, rather than trying to enforce these based on something that is it's a little bit of a square fitting into a round hole, or whatever that phrase is, right? Square peg fitting into a round hole of trying to adapt something that has existed before for the current technology. New laws were created for the internet. There's plenty of precedent for how this has been done before. I would love to see it go in that path versus effectively creating law via regulation, regulatory enforcement and precedent.
So you could imagine there's a lot of tensions of competing interests there. There's traditional finance, there's other governments. So it's not just like there's one government around the world that wants their own thing, right? There's competing interests there. How long do you think that kind of process could take to play out? Is that going to play out in the next 5 years, 2 years, 10 years?
10 years. I think it's going to take quite a while to play out. I think a large determinant of how that plays out is actually which party is in control. Who are the district attorneys that are looking to enforce this this regulation? Who's the SEC commissioner that is kind of working with these district attorneys to enforce the regulations? Which party's in control in putting in the various judges and all this type of stuff it changes in the United States, right? And so I don't think we're actually going to get very, very clear distinctions of what's really going on and a permanent sort of new state to have occurred within the industry as in very real clarity for about 10 years. I think it'll be a back and forth between actions being taken by enforcement and regulatory bodies, that being fought out in the court or at least settled in the background, and then reactions by legislators who say, no, these are the rules that should actually be in place. We're just starting to see that sort of apparatus really kick off. And I think we're at the early stages. And just by looking at how sort of other financial industries have been developed and rules have been created around it, this can take some time.
Are you concerned that the baby could be killed in the cradle?
I am. It could absolutely be killed in the cradle. I'm very hopeful, though. I do think that a lot of, I think legislators overall, they do see the potential of this technology to dramatically improve the lives of citizens around the world, and specifically for the countries that they're really focused on. I do think they see the economic gain that could come from allowing this technology to grow and foster. And I think they rightfully do see the risks, the downside risks of fraudulent activity and the exploitation of people using this technology. And so I am very hopeful that over time, they will sort of come to rational conclusions to build structures that do mitigate those downside risks while allowing the flourishment of the upside of what this technology can really bring.
Do you think regulation will support the larger growth of blockchain and the on-ramping of larger assets? Those two things correlated.
If it's done appropriately, yes, absolutely. If it's done appropriately, I'm not anti-regulation by nature, by any means. I think one of the points that I made earlier, that I do think there needs to be more disclosures, more transparency between what the technology does and what users understand it to be done. I think there's too much fraudulent activity right now within the crypto ecosystem overall. It just needs to be the appropriate legislation to not impede progress. But I absolutely think it is necessary, and it will be. It is coming.
Great. Well, let's hop on to something that's more topical at the moment, basically smart contracts and layer one protocols. We've just had the merge in Ethereum. What's the post-merge future look like?
Post-merge future is, the Ethereum hasn't solved its scaling issues, right? The merge is really something that is changing the consensus mechanism / Sybil resistant mechanism from proof of work to proof of stake. That adds a lot of benefits to the Ethereum ecosystem. It's more environmentally friendly. It's actually turns Ethereum from a inflationary asset to potentially a deflationary, or let's call it a lower inflationary network, right? So I think it's estimated that the inflation of Ethereum pre-merge was about 4% annualized, somewhere between 4 and 5% annualized. Now it'll likely be between -1% deflation and 1% inflation annualized. So I think that's a benefit in a world that needs more stores of value, in my opinion, or alternatives to hyperinflating fiat currencies, especially in those emerging markets. So I think that is attractive as well. Obviously, one of the big issues with Ethereum today is it's expensive and slow to utilize. Layer 2s are coming in to solve a lot of those issues, but future network upgrades like sharding and the various types of sharding that are being examined today will actually further improve the scalability of the network. That's something to look forward to in the future in the coming years.
How do you see Ethereum versus other platforms, right? There's Solana, Avalanche, Cosmos, you could, a long list. How do you see those competing? Is it that really this layer one compute system is something where each of these blockchains competes, and in doing so becomes more performant, faster, cheaper, and then they all take a sort of place? Or is it more of a Metcalfe's law where everybody gets familiar with Ethereum and it improves and improves and everybody moves towards that on the same one programming language? What do you think the future of that layer one, layer two environment looks like?
Yeah, so what I will say is I think within that 15 to 20 years or 10 to 15 years that I outlined, a one or a handful of smart contract platforms where over 50% of the global GDP of global economic activity will occur on one of those smart contract platforms or a combination of them. What the exact composition is in terms of, is it going to be Ethereum? Is it going to be Ethereum and Solana? Is it going to be Avalanche and Solana? Is it going to be one that we haven't even heard of? I can't tell you, to be quite frank. Don't have full conviction on which one it'll be. I think Ethereum has the highest likelihood to be the dominant smart contract platform today to support that economic activity within the next 10 to 15 years. And I think it is absolutely doing the right things to make that happen. I think it's far easier to develop applications on top of Ethereum today compared to others. It's the first major smart contract platform. But when I look at these user numbers and the fact that the leading dApps today have around 100,000 to 200,000 daily active users, and there's not that many who have, I think there's a total of maybe 5 that have over 100,000 daily active users right now. That just shows you how early we are. Because to be quite frank, if you look at Web 2, you're looking at the millions and millions and millions of daily active users for many of the top applications. And so while various smart contract platforms might have advantages today, there's just not enough users, in my opinion, to determine this is for sure the winner vis-a-vis the others. And so I still think we're still pretty early on in terms of these smart contract platforms effectively competing with each other. And I still think there's plenty of room for improvement across the board.
Very interesting. And what's your thoughts on the different kind of programming language and how they compete on these smart contracts?
Yeah, so obviously having the ability to Ethereum requiring the use of Solidity or Viper or these sort of Ethereum native programming languages is great for defensibility, and the fact that once you learn that language, you're going to want to utilize it. And there's only a few, you can really only utilize that language on building the Ethereum network, or maybe some others have developed the ability to support that language, but really for the Ethereum network and EVM compatible chains. But when you have blockchains like Solana, which I believe allows you to develop in the Rust language, that is enabling a wider variety of developers who aren't necessarily crypto native to enter the ecosystem and build applications. I think it's a smaller point. I think it's an important point, but at the end of the day, developers, or at least the developers I've worked with, if they're really passionate about a technology, they'll, learning the language isn't the real barrier to entry in order to create an application. In my opinion, what is the far bigger barrier to entry is what is the dev tooling on that network look like to support developers when they are building applications. Ethereum has some amazing dev tools out there, from Truffle to Hardhat to things like Mixer and others that really enable a far easier development experience to occur compared to some of these other blockchain networks that are still really building the dev tools out there to support developers and building applications. The libraries that developers have access to on Ethereum, the open source examples, it's just far, far greater. And once again, we're still early, so things can quickly change. And the more years that these other blockchain networks have been around, and the more dev tools that have risen to support developers there, that will the gap between the two will change. But I think that actually the dev tooling ecosystem plays a far bigger role in how many applications and how quickly they can be developed on the ecosystem versus the language differences between how to program the smart contract based applications on them. Does that make sense?
Yeah, and I think I've seen a lot of developers who there's a hurdle with learning the language, right? Solidity versus running applications in Rust on Solana. But there seems to be another big hurdle, which is just understanding and wrapping your head around how DeFi works and how all these AMMs, how oracles, how all of those systems actually work in a crypto economic way. There's a lot of domain knowledge you have to learn whichever platform you're building it on. And I think that actually shouldn't be underestimated in terms of someone's experience. That actually takes quite a while to like get immersed in it because there's so much going on. I mean, I feel like in DeFi and all of these systems, there's so much innovation happening. It's like a hose pipe.
Absolutely. I completely agree with you. And, just because you know how to develop on one doesn't mean you know how to develop on the other. And often these frameworks are very, different to learn. From understanding the consensus mechanisms to like how transactions are submitted and validated. That's a very different system. Even on EVM compatible chains with, Ethereum mainnet itself. And obviously an EVM compatible chain that uses, the Ethereum virtual machine is going to be more similar to Ethereum. But even then you do have to understand the differences for what the consensus layer looks like, how transactions are submitted and ordered. All that is super important to know. I completely agree with you. The domain knowledge is quite different between them.
Now we're talking about building stuff, which I'm always excited about. Not that I'm not excited about the other stuff. Where is innovation happening? There's NFTs, there's DeFi, there's stable coins. What are the areas that are really happening right now? What are builders focused on and where's funding focused on?
Funding, I would say, is a large, the past year has been focused on, gaming, DeFi, and NFTs, the big themes. One of the more interesting areas that's received a little bit of funding, but I think will actually take off, has to do with like reputation and identity. So like social is an example of what that'll look like with like Lens protocol and a few others. I think that's an area that will be very interesting over the coming years, especially as we get into the next bull market, whenever that may be. Within DeFi, there are some interesting applications being developed, like how to speculate on the yields or how to get fixed yields within the lending ecosystem. I think that's very interesting. For NFTs, SudoSwap introduced an AMM-based NFT exchange. That's very interesting. Different ways to financialize NFTs, collateralize NFTs. I think that's super interesting. Under collateralized lending is being worked on by a wide variety of lending applications within the DeFi ecosystem, from Goldfinch to many others. I think that's pretty interesting. And then hopefully stuff comes to market that I can't even imagine, because that's what's always exciting about crypto. There's always something new brewing right under the surface.
Yeah, there's always something new brewing underneath the surface. So yeah, it's an interesting tour de force. What about IoT applications like Helium? Are you familiar with any of those kinds?
The only one that I'm really looked into in some depth is Helium. And I know they had really great success in terms of adoption numbers last year. I think their adoption slowed down a little bit. I haven't looked at the numbers quite as recently, but it's just not my area of expertise. I do think IoT, there are some interesting use cases there. I would love to see some more success stories.
Yeah, what I think is interesting about Helium is they were the sort of first project which created a crypto economic incentive to go out and do something in the world. In this case, it was purchase devices that would provide not Wi-Fi, but a sort of similar low frequency, higher range wireless signal that would power Internet of Things. And I think there's a question there about the scarcity got people in to deploy a $5 billion network with helium not having to foot that capital bill. But the question is, how much value does that network have over time? And I think it's a lot lower than people have expected. And so that's caused the price of the token to come down. But I think it's very interesting use of blockchain outside of, you know, things which are purely digital in the extent. So I think it's going to be an interesting place to look for new technology and innovation. So maybe zooming out a little bit, can you tell me about like the current market overview? Obviously, we've had a bear market. What do you see? Do you see trends there, things that are interesting that people should keep an eye out on?
Yeah, so, you know, we're definitely in a bear market. We're in a bear market not only in prices, but in user activity. It's much lower than it was a year ago, for example, and especially in quarter 3, quarter 4 of last year. It's lower for the NFT ecosystem, for the DeFi ecosystem, et cetera. There are certain pockets that are experiencing some growth, like Solana NFT ecosystem, for example, has done really, really well the past couple months. It's you know, in my opinion, the market is going to continue to have issues as long as the macro environment continues to deteriorate. And, you know, there's some people who really believe in that. There's some people who are like, oh, macro doesn't affect crypto at all. I do think it dramatically affects crypto. And so, you know, until that environment sort of clears up, I think it'll be more and more difficult for crypto to gain adoption. Now, there will always be pockets that are able to attract users that will become attractive. But it's way easier to play ball when the sun's out than when it's pouring down rain and snowing.
Yeah, so really look to the macro, the traditional finance markets, and factor that in. Because I guess there's a question is, how much of the value that we've been talking about that could be realized over the next 10 years is reflected in those prices versus the sort of speculative fluctuation versus macro correlation to traditional finance?
Absolutely.
Okay, cool. Well, hey, I really appreciate you taking time to talk about your experience and knowledge. And I would recommend everybody to go to sign up for your newsletter, which comes out frequently and is packed with lots of insights. And I'll link that in the description. Have you got anything else you'd like to leave us with today?
No, thank you so much for hosting me, Stephen.
Thank you very much. My pleasure. Talk soon.
Awesome.